Well, hello and welcome to PM Express, change of environment. So it's all good. It's all good. But we're here to talk to an old friend, old family member over a big issue. Recently, Ghana was out in the market to apply for a bond. And as usual with everything, the nation is divided. Those who said, well, the nation's credibility is so low that they could not secure what they wanted in the bond. The other half is saying, no, we got more than what we needed. We just decided not to go for the whole lot. I'm here for education and explanation and to find out how it is we stop. Because this whole bond is to, offset the bill we've left for the energy we have used. Because you and I don't pay the actual value for energy. That's the truth. So assuming we buy electricity at 10 cedis a unit, you and I are paying probably 6 cedis a unit. So there's a constant 4 cedis build up that's left for somebody to pay, for the Christmas somewhere. Now this build up has gotten to 2.5 billion over the years, and we have to offset it. Now this 2.5 billion comes from banks and financial institutions and are sitting on company books, literally collapsing them. So at one point in time, somebody should bite the bullet, pay off all these debts, and find out how it is we move forward. That's the discussion. And so they went out in the market to secure this money. Did they get it? Did they not get it? But even if they pay for it, we are still not paying enough. So then what happens? Are we just piling up the debt so that next 10 years we go out on the market again? Wow. My name is Nana Nsakwa, Chief of the Little Republic of Akomo and your favorite TV show host. And I'm here to talk to an old friend, old brother, old colleague. Don't you go away. When I come back, we are discussing bonds and matters arising.
You see, we want the people of Ghana to understand the economic management team we have. The days when you can go to Malata market and buy onions and tomatoes and calculate inflation is gone. And everybody who has learned economy knows that there's nothing like Malata inflation. But Baumia calculated Malata inflation after his wife asked him to buy onions and tomatoes. And you journalists praised him for embarrassing Ghana. The academia kept quiet when he was polluting our students. Today, you see where he has sent us. We are now a laughing stock. I just came from Tanzania, and you'll be surprised that a very key senior figure was telling us that Baumia came to Mauritius and was bragging. That's what your colleagues see you in the eyes of your colleagues. Please, we are doing serious business. They rode on the back of the confidence of the economy that the NDC left to raise a bond of $2.25 billion in 4 hours. In April, when you're not here, they did it in 4 hours. What has now happened that in 1 month, they still cannot raise it? You see, they are destroying the fundamentals that we developed for them. When they were having honeymoon, January, February, March, they came here and they were taking credit. We told them they should wait. Their time will come. The time has come. We have been embarrassed. They are using a special purpose vehicle that is riskier than any other instrument. Look, go and look at the balance sheet of ESLA PLC after raising the bond. It is negative 3.6 billion. That is the balance sheet. Is that not it? Do they have any asset on that balance sheet? Tell me which investor will put his money in a company that starts with a negative 3.6 billion. It is only under the best economists that the world has ever produced, Dr. Mahamudu Bawumia. And I'm sure tomorrow he will grant another interview that is reminiscent of when he was a running mate. But now as a vice president, walk the talk. My big brother mentioned the point that he couldn't understand very basic mathematics. He has never understood the economy of Ghana. He has always lied about the economy of Ghana. You recall he said that our debt was about 36 billion and we end at $40 billion. When he came here with his budget, they said it was around 26 billion. How did His Excellency John Dramani Mahama miraculously find $14 billion to pay down the debt in 3 months before we left office?
Thank you very much for staying. Bonds and matters arising. With me is Kojo Opon Nkrumah, MP, Honorable Member of Parliament for Ofurasi Ayeribi. Kojo, you're welcome.
Thank you,
To
Nana.
your own office.
Thank you.
You're welcome to your own office. Kojo, I want this to be an education. So first of all, one will say, what's a bond? And why is it not a Euro bond and this bond? Can you just educate us?
So maybe I'll give you a bit of a background. Every year we do what we call our tax and spend plan, or your income and expenditure tables, or what you call in national economics, the fiscal accounts. It lists all the revenues or the inflows our government is expecting, and then it seeks to apportion these revenues to various expenditure commitments based on national priorities, political promises you have made, etc. You have to find ways of funding all of it. The ideal situation will be that you're able to raise more than you are spending. Indeed, there are rare instances in many parts of the world where occasionally a country has what we call a balanced budget. But very often, you find that because the needs of the society are insatiable, you have a long list of expenditure items, but you don't have enough revenue items to cover them.
Is the road to Odumasa in somewhere? I'll leave you.
So you will be asking about that. I'll be asking about my road. Everybody will be asking about something. And people also usually don't like paying taxes, generally, the world over. Mm-hmm. So you'd find out that the sovereign is always limited or is constrained for how much it can raise to meet its expenditure commitments. So often you find out that we have what we call a deficit, and that deficit must be financed. There are various ways of financing the deficit, as in who is paying for the extra things we are consuming that we don't have money to pay for. Sometimes you may choose to get a bilateral loan. So one country may choose to give you a loan directly to plug that part of the budget. You may choose to go for a multilateral loan. So we have all of these international development agencies like World Bank, African Development Bank. They come together, pool money, and they make it available to various countries for various programs. You can go for one of those. Or you can also go to what we call the sovereign debt markets, or like the Eurobonds, where you now go onto the international financial market and say, I need about $1 billion to plug a gap in my books. The very first one we did was, I think, about in 2007, during President Kufuor's era, where we went for a $750 million Eurobond to plug our books. So that's like a single bullet bond to plug. We also have what we call the local capital markets, or the domestic capital market. So through the Bank of Ghana, government will usually say that looking at the deficit we are going to incur this year, let's say a deficit of 10%, it comes to CD terms, for example, just an example, about 10 billion cedis. We're going to take 5 billion of it from the international market, and the other 5 billion we're going to take from the local capital markets, because you must have a certain mix that reduces your risk. Now, the local capital market works in a way where, through the central bank, what we have now decided to do, not now, a few years gone by, in fact, it started under my very good friend, Mr. Setekbe, who was finance minister at the time, is to do what we call the book building bond. So government tells the market that we are looking to raise up to about $1 billion out of this 5 billion. But we don't want to pay interest rates of beyond, for example, 25%. Why? Because you want to be able to predict the interest rate so that you can factor it into the fiscal accounts for next year, because next year one of your expenditure items is interest payment. So if you don't get ahead and control whatever rate you are incurring now, you just may end up taking any amount of money at a higher cost, and it will hit your fiscal tables next year. Remember, we've been saying that there's no fiscal space because all the money has already been committed, because we've borrowed inappropriately in many times past and it hit us there. So we have what we call the local capital market, or the domestic book building bond approach. So we say we're looking for X amount of money at this rate. We open it, the market talks to itself, investors, roadshows are done, and you have people making bids that, oh, I can give you 100 million at this rate. I can give you 200 million at this rate, because you have all sort of investors, some of them local, some international, who have come through local fund managers to participate in what we are selling here locally. Then at the end of the window, you close and say, how many bids did we get? How much of that fits within the price range we are looking for? Then you close the books, and then you ask people to settle. They settle, you mop up the money, and it forms part of your deficit financing. So these are the various ways by which we finance our deficits. Of course, if we had enough revenues on a year-by-year basis, we won't have to do this. Government has been working on increasing our revenue flow. This year, for example, we have tried to increase revenues by about 33%. 33% increase in revenue in 1 year. quite steep. In fact, when we went to the World Bank and
Trying
IMF,
to, or you have?
that is a target for the year, and we're working to the target. By the time the year
Is it
ends,
too ambitious?
well, that's what everybody says. If you've read what the IFS has been saying, or the IMF, what everybody's been saying, they say it's a bit ambitious. Why? In fact, our friends in the opposition have been beating us on the head that you couldn't meet your revenue targets, you couldn't meet your revenue targets. And it's interesting because we are trying to be self-sustaining, that we're able to raise enough revenues to meet our expenditures so that we don't end up having to always be borrowing. So if you are, there and excited that we are being over-ambitious, you are missing the point. We have to be ambitious to try and raise enough money to take care of the various expenditure commitments that we will have.
Let me divert a bit and then we come back. You see, because if you say you're going to increase it by 33% and the tax index hasn't widened, is it then, are we beelining towards the same old guards and,
There are various ways. There are various ways. So, for example, in this 2017 economic policy of government, we said we wanted to bring down some of the taxes and push more compliance and broaden the tax base. We said we wanted to close some of the loopholes when it came particularly to tax exemptions, for example, and the numbers suggest that we've been able to do that. So there are various ways of ensuring that you can raise more revenue. So the whole enterprise of domestic resource mobilization, which we've been heavy on this year, which every responsible government must do, has been number one on our agenda. But also number two on our agenda is the fact that one of the many huge items on our national debt stock, may I say, for example, our national balance sheet, is the legacy debt in the energy sector. The energy sector, like you rightly said, introduction, over the years, we've played a lot of politics with it. So governments have not, been bold enough to make it efficient. And therefore, government says, okay, don't pay or I'll subsidize, or government enters into all sorts of funny arrangements that keep piling up a debt. As at the close of December 2016, the legacy debt in the energy sector was about 10 billion cedis, 10 billion Ghana cedis. That debt is also growing by the day because the reasons for which that debt accumulates have not gone away. You have inefficiency challenges on the distribution and transmission side between GridCo, ECG coming down that have not been cured.
What percentage are we hovering at now?
That's around 25%.
Wow.
The last numbers I saw. So when we produce 100% of power, by the time it gets to you, about 25% of it is lost.
Wow.
So it's only 75. 75 now also has its challenges. How much of it are you collecting back? That's another set of challenges. Government institutions are not paying. There's a lot of under-recovery. You have challenges there. So you have to tackle the transmission, distribution losses. You have to tackle issues like inefficiencies even in the production cycle. Remember, because we went into an energy crisis and we were very desperate, we were signing a lot of power purchase agreements, take or pay options that were just adding debt. Sometimes there are plants that don't produce any power, but we still have to pay because we have literally rented the plant because we're in an energy crisis. So all of these things have contributed to an energy sector debt stock of about 10 billion cedis as at 31st December 2016, which, like I said, is growing. The only answer that the previous administration left us with, one, was an Energy Sector Levies Act, which seeks to put a bit of a levy on a number of energy-related and sometimes even road-related items to mop up some money and to try to amortize or to pay down this loan. From opposition, we said that that was not a very sharp way to tackle the problem. Because if you keep taxing the people to pay for the inefficiency, you haven't solved the problem. You have to find a way of A, paying out the debt once and for all, so that the energy sector producers that are encumbered now can have money and liquidity to retool their business. There are many of them that need to retool. ECG, for example, needs to retool, but because they don't have a lot of liquidity, they are constrained. Then the banks that have lent them money can get their money. Because when the banks don't get their money, right now, non-performing loans in the banks, around 20% thereabouts. And we are saying that a good chunk of it is because of the debt owed by the energy sector companies. So if we don't pay, so that they can also retool and pay the banks, we run a risk in the financial sector as well. The third level is that where the financial sector doesn't have the liquidity, they cannot lend money to you at Multimedia and to all of the other private businesses so that we can have a certain multiplier effect towards growth in the economy. You see how the problem goes around. So energy sector levy drip and drop, one, a bit high, two, doesn't solve the problem once and for all. So we argued that, first of all, we can reduce some of the levies in the Energy Sector Levies Act, and we did. In the budget, it was one of the items that we reduced. Some people say we didn't reduce enough, etc., but we promised to reduce, and we reduced. We've kept to our word. Two, we are saying that instead of waiting, because if you look at how much we are getting in drips and drabs, it will take 10 years and beyond, assuming the debt doesn't grow anymore, to pay what is there. So we said, we are going to go onto the bond market, onto the domestic book building bond market, and target to raise about 10 billion cedis to pay off the debt. When we do that, the debt doesn't grow anymore, if especially we're able to solve the other issues on the other side, which I'll come to.
Yeah, I was going to ask, how do we stop it?
Yes, and then once we do that, this drip and drop payment coming from the Energy Sector Levies Act, whoever has financed this repayment can now hold on and receive that money over the 10-year period and be settled. This is how we have construed this transaction. In doing so, we had an option. Do we go out and say, government of Ghana wants to borrow this money on behalf of VRA, CG, and all of these people, and add to the national debt stock? Remember, at the beginning of the year, we said our debt stock has gone so high, GDP hasn't gone so far, so debt to GDP ratio is almost at 74%. We have to start bringing it down, maybe somewhere to about 65, 60 thereabout, so that our debt is sustainable. It is one of the measures for debt sustainability. So if we have, and we've been paying down heavily on debts that we came to meet. NHIS, for example, we came to meet about 1.2 billion worth of debts. That's why you were having all of the challenges in the health sector. You had GOSPA, the pharmacist people, you had the hospitals complaining. You notice they've all gone down now because we've paid over 900 million and we are still current on this year's payment. So we've been paying down a lot of debts. But what we are saying is that let's go onto the bond market while we are paying these debts and let's raise some money to clear this other debt in the energy sector once and for all so that the trickling effect, like I've been describing to you, happens. Now, if we, however, go and raise the debt as a sovereign debt, as a public debt, let's say on the Eurobond market or some other international market, we go and say we want 10 billion, one transaction, bam, come and pay. We promise a high interest rate, we back it with a sovereign guarantee, we collect the money and come and pay. We take our national sovereign debt back up. Debt sustainability goes back up. It's counterproductive. It's not that we don't know that, we know. So we elected to go another route. And the route we elected to go is that, wait a minute, these SOEs themselves are private, well, their debts are not considered as government debt. Why is it that in our bid to solve it, we want to create federal government debt? We shouldn't. So let us set up a special purpose vehicle. That's the SPV that is being talked about. It's a special purpose vehicle. It's a vehicle specifically for this purpose called ESLA PLC with a nominee shareholder. And we are doing two things. We are assigning to ESLA PLC the ESLA revenues that will be coming in. That, okay, ESLA PLC is not the one that is going to receive the revenues that are coming in. Therefore, ESLA PLC can take the debt off the books of these SOEs.
Okay.
So ESLA PLC gets the money, gives it to these SOEs, they can clean up and pay the banks, and the ESLA PLC will take its time to receive the monies as a corporate bond on the domestic market, with which we are choosing our own rates. And we said that looking at the yield in the market, we're hoping to go beyond or between 18 and 19.5%. The instrument, yes, the instrument, that's on the city side. The instrument is also tradable, it's repoable. So if you buy it today, we use your money to solve the debt. But tomorrow, if you need to sell it, you can sell it to somebody else and take your money. And it's on the market, it goes like that. A very, in our view, a very smart way of dealing with the energy sector challenge.
18%, is it fair?
Looking at the market yield, yes, it is. And, you know...
Quantum in time?
It is. Today, check on the market for corporate bonds. Corporate bonds on the market, today you find just about 5-year bonds on the market. Look at the yield that, you know, they are being priced at, and look at the yield that we are pricing at. So generally, this is how we have tried to structure the transaction. So what did we do? We said we are looking, so we came up with what we call the ESLA PLC bond program. We set up ESLA PLC, nominee shareholder, administrators from KPMG, etc., very respected board of directors. And we asked them to go to the market. And the program is a 5-year program. And I think that's what people don't understand. We've given ourselves a window of up to 5 years within which to raise 10 billion to pay down this debt. Remember, this debt, even if it's not growing, will take at least 10 years to pay, but it is growing. We have to tackle the other challenges, which I'll come to. So we've given ourselves a 5-year window that maximum within 5 years, we should be able to raise the 10 billion to close off. So we asked them to go do first transaction, and they go for a ceiling of 6 billion. That today, the ESLA revenues they are getting can only service about 6 billion. So they are going to take not more than 6 billion. People think that the 6 billion is a floor. Or some of those who have been criticizing think that the 6 billion is a floor. It's a ceiling, not a floor. Therefore, that if you don't get the 6 billion, there's a problem. It's not a minimum. It's actually the maximum, not beyond 6 billion. And we said we don't want to go beyond the rate of 19.5, between 18 and 19.5. And we broke it down into two, 7-year paper and a 10-year paper. The 7-year paper oversubscribed in the first window. The 10-year paper, in the first window, we got a lot of reverse inquiries. People wanted to know more about it. People wanted to ask whether or not we will offer a higher rate, etc., etc. We stuck to our guns and we said, no, we don't want to pay high risk premium. We're going to stay at 19.5. By the time we closed the transaction, we got bids of 5.32 billion as against the ceiling of 6 billion. Nana, basic math, that is almost 90% of the ceiling we're looking for. The transaction advisors and everybody now sit together and say, okay, so you're looking for up to 6 billion. You've got 5.3 billion, but let's check the rate. They check the rate and say, no. If we take all of this 5.3 billion, we will be creating the same old problem we've been complaining about. So we won't take beyond 4.7 billion because only 4.7 fits within the 18 to 19.5%. The rest, they're literally tempting us that we'll give you the money, but we want to charge a bit higher. And we're saying, no, we're not interested. And so it was capped at 4.7 billion. Mind you, we are trying to raise 10 billion within a 5-year program. 4.7 is almost 5 billion. Now if you've done 5 billion in your first tranche.
And you determine the rate that, look, at this, we're going to buy at this rate.
I have a copy of the prospectus here, which I can give you. We indicated the rates that we were looking for, and we compared it to other rates on the market. And people offered us money above that rate. In fact, in the reverse inquiries, there were people who were willing to offer us higher money or more expensive money. And we said, no, we have an that is why we chose to do this in the book building domestic bonds, because that is the place within which, among other things, we have full control over what rates we are taking. And that is why the transaction was closed at 4.7 billion. It's been a very successful corporate transaction. Our expectation is that ESLA PLC within this 5-year period will continue to do a bit more and mobilize a bit more and pay down so that the risk that we're facing in the energy sector can be sustainably resolved. While we are doing that, we have to deal with the issues in the transmission and distribution cycle that are contributing to the debt. Now, let me take you back. 20 years ago, we came up with an energy sector, restructuring program. At that time, VRA was the producer and the transmitter of power. I think sometimes people forget. I was a very young man then, but I recall some of these things. And VRA at the time was split between VRA and GridCo. Why? Because if I wanted to come in as an independent power producer and you were the player and the referee, then I couldn't predict a fair game. So VRA had to be split into two. So that now GridCo will untake the power from VRA and create room for any other power producer to join. We're also supposed to introduce a lot more efficiency on the distribution side of ECG. We never found the money and the space to do it. It was only recently that Millennium Challenge account came in to give us a bit of that money to do it. You remember it's had some challenges, it has gone to court, etc. But it is part of a bigger program, which if we don't solve, we wouldn't have made much headway. So we are very quickly making efforts to solve that side as well, to bring private sector participation into ECG, to ensure that ECG becomes efficient, and that all of these losses that you are having on that side, particularly the revenue losses, are dealt with. On the upside, if you look at VRA's thermal business, which has also drained us a lot of money, especially in the days of the energy crisis, we need to ring fence it, bring in some private sector equity money to give them more punch and also to give them, may I say, higher technical
Have the unions agreed? Because they've been very skeptical about bringing private money. Because bringing private money means loss of jobs.
No, and that's why the president has been very clear with the ECG that we're underwriting that no jobs will be lost with the ECG. The president has said it clearly. I remember the May Day speech that he gave. The unions have said that governments over the years have been dicey with them, so they are not so comfortable. And we have said that whatever letters of comfort or assurances that they require, that we will not sit on as a government to watch them lose their jobs. Because it's not like they are downsizing. It is to ensure that there's private sector participation and efficiency, more money, more efficiency in the system. We all know how we behave when it's public business or government business. So if their challenge is the jobs, let's guarantee the jobs. And that's what is going on. And I am hopeful that there's comfort now coming in the system there, and that transaction will be successful. They have gone to court. The court has ruled on the interlocutory injunction, but it's going to deal with the substantive matter. But we are hopeful that it will be resolved. But I'm saying that it is part of a bigger problem, which if we don't solve, won't make much headway. Then you have issues on the VRA thermal side as well. We have to very quickly ring fence the VRA thermal assets, which are bleeding a lot of money, and again, bring in some private sector participation there. Like I said, more money, more punch, more efficiency in there to stop the bleeding on that side.
What if I don't need 25 drivers for 3 cars? What if I don't need, 30?
Because you're assuming that the challenges are operational efficiency challenges and not necessarily they are core business challenges.
Exactly.
The data we have seen so far suggests that the real challenges are core business challenges. I mean, if you look at their crude oil imports and how some of them were structured and how we have bled through that space, we think that it can be tightened up. And then now you have a lot of these power purchase agreements, which had take or pay options in them, etc., which all added to sometimes what we are paying on a monthly basis, even when somebody is down and it's not producing power, which we are working on to renegotiate and to restructure. It is the mix of these things, the bigger strategy, that will clean up the challenges we have in the energy sector. Now, if our industrialization drive is to work, we need a lot of energy. And if there's so much inefficiency and debt in our energy sector, we can't have enough energy to drive the industrialization. So the energy minister, the chairman of the economic subsector ministries at cabinet level, the chairman of the economic management team, the president, are all very clear that this is the broad strategy we have to embark upon to clean up the challenges in the energy sector, and we're embarking on same.
See, at the moment, VRA has to, use its name or its might to go and buy fuel for all these IPPs. They supply to ECG. ECG sells it. You don't pay, I don't pay, he doesn't pay. ECG can't pay. Gridco won't pay VRA. Therefore, we're out there looking for money. How are we going to plug this hole? Because otherwise, it's just coming back 10 years.
And that's what I've been trying to explain to you, that therefore you plug it. You see, there are various holes. You plug it on various sides. You've got to deal with the ECG issues. You've got to deal with the VRA issues, VRA thermal issues. You've got to deal with the issues on the side of the kind of PPAs we have signed. Like you're saying, somebody has to buy crude for them. Somebody has to still pay them for the plants that they have brought into town, whether or not they are firing those plants, etc. It is this collective cleanup that will bring about the solutions we are looking for. So when somebody simplifies it that Ghana went to look for a bond and didn't get the bond, it means that the economy is bad, government has failed. The person is taking a very simplistic view of things, and I think that we all have a responsibility to explain for people to understand what we are doing.
I'm going to take a quick break here. When I come back, I still want to find out if it's going to be clear that, look, if you bring your gas generator, go and find your gas. If you bring your diesel generator, go and get your diesel. And when you supply it, you go and chase your own money. Because that and only that is what's going to stop, us trying to plug these holes that we keep digging ourselves in. Don't go. Well, thank you very much for staying. Education, education, education. The education will continue. One of the issues that was raised up is that the bond was too complex, and that the international market looked at it and thought, look, this is too confusing, and step it aside. So we want to find out. But before we find out, I want to find out from Kojo that, listen, in reality, we are still not paying for the actual price of the electricity we are consuming. Those who use it for business, we penalize them. Those who use to chill their beers and drink, we credit them. So these are all some of the challenges. I mean, is VRA still going to supply fuel? If I bring my generator and park it somewhere, whether I use it or not, like you're saying, you're paying me top millions of dollars just for me, for the privilege of you having my generator on your land. So after we secure these bonds and clear all these legacy debts, which are still building up, I mean, how soon are we going to cap it so that we know that, look, you use 10 cedis worth of electricity, you pay 10 cedis, and that's not become a government issue anymore?
So, Nana, moving forward, it must be said that the answer to our challenges in the energy sector are not just one. We don't have a single bullet that will solve all the problems. Mm-hmm. There's a financial side to it, which we are trying to clean up the legacy debt and prevent the debt from growing. There is a technical side to it on the transmission and distribution side, like I told you. Mm-hmm. On the upside, if you take the VRA side, there are challenges. If you take the other IPPs and the kind of agreements we have signed with them, there are challenges, and we have to take a second look at all of these, or a good chunk of these, so that we bring them to levels where they actually make a lot more economic sense. And I think the energy minister...
before we rack up a bill again?
Well, I mean, the energy minister has articulated very clearly that we have been in discussions with a good number of them. As I speak to you currently, I won't want to preempt any announcements, especially before the budget comes up. But you can be rest assured that the budget will have some very interesting answers on what we have been able to resolve with, some of these challenging notes in the sector. But moving forward, we have also decided that we're not going to add to the problem by signing further power purchase agreements with these take-or-pay options, etc. I think Cabinet has approved a decision, and it's been communicated to all of us very clearly that any further power purchase agreement has to be on renewable energy, where we are clear in our minds that the costs are lower, where we are clear in our minds that we are not racking up subsidies that we are not paying for, and where we are clear in our minds that therefore we are not piling on more debts. So like I've said a number of times, it takes different solutions at different parts, and that's exactly what government is doing, tackling the debt, tackling the ECG issues through the private sector participation program, tackling the VRA thermal issues, tackling the renegotiation of some of these old agreements.
Shouldn't we have left the financial bit last, where we make sure that we've siphoned VRA's responsibility of supplying fuel, we renegotiate these Ameri car parts, say, listen, when you are off, you're off, when you're supplying, I'll pay you. And then the last bit then becomes, well, so now that we have solved it.
If you do it that way, the challenge is that by the time you finish, the debt will no longer be 10 billion. It would have ballooned. And so you have to deal with all of these literally at the same time.
No, the debt will be the same.
No, it won't be.
Assuming the debt will be, let's say, 12 billion by the time we finish.
Yes.
If we pay 10 billion, by the time we finish, there'll still be 2 billion left to go and pay.
Yes, but if you do not clear, so today, the cutoff that we're using is December 2016. By the end of this year, I assure you, if we haven't cleared that debt lump sum, it will not be 10 billion. It will be more. That is why it's important to, as early as possible, backstop the debt and find a way of ring fencing a good chunk of it as quickly as possible to avoid the debt growing. And at the same time, you deal with the other part. So it's not an either-or situation that, why don't you finish this before you do this? No, you can deal with these matters at the same time, and that's exactly the approach that we have taken.
The complex nature of this bond. So why have you made it so complex?
Let me take you to page 22 of the prospectus. And I think sometimes when, for example, His Excellency the Vice President...
Can I show you to the camera?
I will.
Okay, after you've gone through it.
Yes. I think sometimes when His Excellency the Vice President says that it appears that some of the critics, and I don't think that all the critics are, may I say, unfounded. Some give some very good advice. Just this morning on your radio, I was talking to Professor Godfred Bockman, who gives some very good advice. But it appears that some of the critics have decided either not to read the documentation, or if they read it, just to misinterpret it. And I'll give you some other examples. So the bond that they describe as complex, this is page 22 of the prospectus. It says the transaction is simple and straightforward with buffers built in. And it goes on to bullet it. SPV totally ring-fenced, no cash flows back to sponsor until bonds are fully redeemed. The lockbox holds excess EDR levy cash flows above the minimum debt servicing reserve amount. We've got about 350 million in that account already. Government has also underwritten about 600 million. That's what we owe ECG, etc. So the details are here in the document that if anybody wants to really do a genuine analysis, you go into it and you will find the answers in here. It is not a complex bond. We elected to do a corporate, not a sovereign, because we don't want to add to national debt stock. We elected to do book building domestic so that we can control our own rates, because we want to ensure that the fiscal tables we are drawing up for next year do not get out of hand. The fact that maybe one person finds it complex doesn't mean the investors found it complex. Indeed, if the investors found it complex, we would not have had 90%, nearly 90% of bids, for this first tranche of 6 billion. I very much disagree with that view. It is true that this would have been a no-brainer or easiest to do as a sovereign debt. But that is exactly what has gotten us into some of the problems we are talking about. If you read John F. Kennedy, when he announces the US space program, he says, we choose to do these things. We choose to go to the moon and to do these other things, not because they are easy, because they are difficult, but they are things that must be done to get us to the point that we choose to get to. And that's exactly what we are doing here. We chose not to go by the easiest route of just adding national debt, but to go through this SPV, to go through this domestic book building bond so that we can control the rates and still mop up how much money we were looking for. And I think that so far we've been successful with this transaction.
I think what the minority is saying, once upon a time when they went on the market, whatever bond they went, it was oversubscribed.
But the first question we should ask them is what type of bond? And that's where sometimes I get a little bit uncomfortable when I watch my colleagues in the media listen to them and not ask them these questions. When anybody says that to you, the first question you ask him, what type of bond was it? Was it a corporate bond or a sovereign bond? What was the rate? Was the rate 24, 25%, or was the rate at 19%? And how was it comparing to rates on the market at the time? Now, I assure you that if we have gone to the market saying that we're going to do this as a sovereign bond with a rate of 22, 23%, this thing would have been oversubscribed. But that is exactly the problem that we have had, which is why we've racked up all of these sovereign debts, which is why now a new government is being forced to gradually try and pay it down. What sense does it make to repeat those problems? This is exactly why we had to choose this structure. So if they make that argument, and I also heard another argument that, you know, the debt swap we did in April, or the reprofiling of our debt that we did, within 4 hours we were able to raise about 2.5 billion and we're being applauded. How come we haven't done this? And that one was based on the fundamentals left by President John Mahama, and that this is based on, again, that's laughable. That's a sovereign bond, not a corporate bond. You're comparing apples and oranges.
I know one of the policies to free out local, the local financial space, yes, so that businesses can compete there. Yes. So, I mean, going forward, are we going to see more of this?
So, to free up the local financial space, you're asking ourselves whether or not government is literally going to borrow from the local market, or is, because you know there's a difference between the capital markets and the money markets, whether or not government is literally going to borrow from the local market, or government is going to issue these instruments, these securities, these bonds. These instruments, these securities, these bonds are good because what they do is that, for example, for the long-dated bonds, you have a lot of foreign investors coming to open accounts with local fund managers and saying that, I see you have some interesting products on the Ghanaian market. Government is doing some interesting bonds. I want to put my money in it. It brings liquidity. It brings foreign exchange. Now, when these bonds now start trading on your local market, it brings a lot more activity on your local market. Because now I have the bond, I want to sell it to somebody, somebody wants to buy the bond, oh, okay, 2% here, 3%. That there's a lot more activity on the local capital market. So yes, this will go a long way to assist, because what it also does at the back end is that it creates liquidity for the banks, because the underlying transaction, when it's gone through, will give money to the banks, which will now be available as loans to the private sector for them also to be able to do their business. So all in all, this is a transaction that really makes sense.
How assured is the Ghanaian voter that, look, plugging this 10 billion hole, which will probably buy you 8 years peace of mind while we rack up another bill. By the time the bill is racked up, it's your 8 years, and look, now we have to come back to the table and worry about it, whether you're still in power or not. It's somebody
else's. How sure are we won't repeat this?
Yeah.
We are pretty confident because, like I said, we are not using a single bullet to say that the solution to the energy challenge is bond. We haven't said that. And that's why I started by telling you that we have to deal with the financial side, you have to deal with the ECG and distribution side, you have to deal with the VRA thermal side, you have to deal with the IPPs that have what we call bad deals, you have to deal with the new IPPs, which are the renewables. So what we are seeking to do is to do all of this together to ensure that the risk you are talking about doesn't occur.
Then you need to go for 20 billion and buy everybody out. Because, I mean, if you look at distribution, the wires are bad, some of the transformers are not right, and therefore they're losing so much as they are transforming governors' wires, protected wires.
Why do we go for 20 billion when we can A, clear up the debt, and B, allow a private sector person who has his money to come into ECG and solve the problems you are talking about, Nana? We don't need to go and borrow money and put it on the national debt stock to go and do that, when we can allow private, and this is the essence, I like the question you asked, this is the essence of the ECG private sector participation program, so that we can recapitalize, we can retool, we can do these investments that you are talking about on that side. You see, it's not always that government has to go and borrow money out to our desk or come and tax the people to solve some of these problems. We can find interesting private-public partnership arrangements that can solve some of these problems for us. And that is the new dynamic that this new administration is introducing into the solution space to the problems of this country.
But still, you see, as soon as you say, I understand, but we are skeptical as soon as you say private. Hey,
why?
Because then it means state, another state enterprise is being sold away.
It's not being sold. You are allowing private, and that's why we said this is private sector participation. We haven't said we are selling ECG. In fact, if you have followed, we have said that this is a concession arrangement. It's a concessionaire we are bringing on board to to bring his money and his expertise to assist. I believe that we have learned a lot from the old divestiture implementation program, where you sell state assets and think that that's the solution to the problem.
So let me bring a bit of politics in there, because when the MPP was in opposition, they were not happy with all this concessionaire business coming in.
What did we say specifically? And that's, you see, the devil is always in the detail. I represented the party on Newsfile when we were articulating that argument. I remember the position that we took.
Can you share it with me?
But you see, for everybody who seeks to say that you were not happy, I think we should be fair and go specifically to what we said. What we said was that there needed to be more information available on the transaction and be the concerns of the workers. The concerns of how much of it is domestic and how much of it is foreign need to be dealt with. And when we came to power, we have done a lot more engagements. We have answered the concerns of the workers by underwriting that no jobs will be lost. We have gone further to say that minimum 51% should belong to Ghanaians. So a blanket statement that the MPP was not happy in opposition, but you are continuing it, is not true. Go into the details and see what we said at the time and see the solutions we are providing at this point in time.
Okay, let me see if my concerns have been addressed.
Please.
My concerns are that the concessionaire is not obliged to buy power from a Mary or car power or anything. So if this guy is big boy enough, he can set up his own solar energy plant somewhere and just supply, his ECG.
But today,
and then we will be stuck with all these plants where we have to be paying.
So two things. Today, anybody can still come in, and once he gets, Energy Commission approval and the PPA sorted, he can still provide the solar and all of these things you are talking about. It doesn't take a concession to make that happen. Mm-hmm. But B, like I've told you, we are, as part of the broader solution, having a conversation with all of these who we have already committed to some agreements that says that by force, ECG should take or pay from them. And that's why I like your earlier question. How do we ensure it doesn't repeat itself? It's because we are coming with a multiplicity of solutions at the same time. We don't need to tackle one before the other, because when you do, you're going to end up leaving other parts of the problem sitting. And that's why we are trying to do this thing 360 as we are now.
With regards to revenue going up 33%, which is good.
Which is our target for the year.
Target for the year. There's been a lot of noise and a lot of complaint coming with the paperless.
Yes.
That all of a sudden, everybody seems to be paying much more than they used to pay before. They were thinking that because now there wasn't going to be all, siphoning money, the rates were going to come down and everything was going to go to government. But now things have lopsided.
So let me take you back. We had a problem. And you see, one of the challenges we have had is anytime we have had a problem, a lot of our governments have not dealt with the problem head on. They find a way around the problem. So we're having a lot of inefficiency, some say corruption, waste at the ports. You set a target of $1 billion and you get 600 million. So what did they do? Instead of cleaning up the inefficiencies in the system so that the target of $1 billion you can meet, they decided, okay, so the average conversion rate is about 60%. So you know what, let's hike up the targets. So if you hike up the targets to, let's say now 1.5, I'll still get about 60% of that one, which is going to bring me around the $1 billion that I'm looking for. We think that that was not a very competent approach to it. It's something we've been saying for a while now. So we are saying that clear the inefficiencies in the system. When you clear it, and now, because at first you have to pay, let's say, 20,000 cedis for your clearance. You get somebody who will value it for you 10,000, you pay this one 1,000. So you end up paying 12,000 instead of 20,000. So they peg the rate at 20,000, but they know a lot of it will leak. 12,000 is going to be paid. What we have said is that clean up the system, go paperless, reduce the human intervention, don't allow all of these people who are now looking at it and changing the rates. Now computerized, paperless is going through the system. What will end up is that the person will pay what is due. It is now that you are beginning to realize that, then they unduly hiked up the rates because of the inefficiency. And now we've had a lot of representation from various stakeholders who said, okay, now that the thing is now efficient, we are realizing that actually the rates are too high. Can we have a second conversation about it? And I think that's a fair conversation. I know the finance minister has been engaging with them. I'm hopeful that the budget will have some good results for them. Well,
I'm sure many people will be very happy with that, because I've had a lot of stakeholders come to me.
I mean, I've traveled across the country for town hall meetings. If you go to the Ashanti region, for example, it's one of the big things that people have complained about. We're happy to listen, but we should also quickly point out what has caused the problem as we look at possible ways of resolving it.
Oh, that's good. Can we touch a little bit about education, Information Minister?
If it is within my scope, I will
It should be
respond to
within,
it.
it should be within your scope. Everybody's commending for free education, but
Yes.
how soon, kids that are sleeping outside, schools that have been overloaded, is there any plans to, move in and tackle this issue?
Yes, yes, yes. You are going to see a significant increase in the budget allocations to Get Fund and, the Ghana Education Service to ensure that we're able to invest in infrastructure significantly in the second year. And sometimes when I hear people who say that free SHS is bad because the students are sleeping outside, I'm in shock. A lot of these students would not have had an opportunity to go to school at all, minus free SHS. We were living under this artificial system where we had very little infrastructure and people who could not afford, and therefore they were staying home, becoming dropouts, and they couldn't, go into school, and we said everything was okay. Now that we removed the cost barrier and everybody has come to school, we are all of a sudden being awoken to this reality that, oh my God, we don't have enough infrastructure. That is fair. The president has said it that there are challenges, but our commitment should be to fix it. And so you're going to see significant investment in Get Fund, GES, Education Ministry, so that we can very quickly step up how much infrastructure we are putting in to ensure that every Ghanaian child who is enjoying free SHS gets the complement of good infrastructure, etc. Our objective has been to remove the cost barrier. I think it's been good. It now brings us to the second challenge, and I think we should be open and head-on. It's good feedback for those who draw attention to it. We should be head-on and tackle that one too.
And I speak specifically for Agena Secondary School, which is next to Odumasa. Now, Form 2, Form 3, together 300 students. Intake in Form 1 was 1,370. School is bursting, the town is bursting, and they are desperate for help.
I have a similar challenge at a Yoruba secondary school. Intake numbers were pretty low. First year students alone about 900 plus, again bursting at the seams, and we are quickly working to step up. I was there with the headmaster and the leadership of Yoruba and the district chief executive as we are working towards quickly finding various means by which we can improve infrastructure so that every child who is there also gets that complement as well. So it's a problem we share, but it's a problem we should solve together.
Agena Secondary. So while you're pushing it, you'll push Agena Secondary School.
I should talk to your MP as well.
yes. And because I think one thing that we are all forgetting is that, very good, we commend free education. But in 2.5 years' time, are they going to tertiary? Are they being mopped up into the labor market? Are they handiwork? There's no clear plan as to what we're going to do with 400,000 vibrant Ghanaians who have now finished six formers, quote and unquote, now six formers. What do? Send them all to Legon? Send them to technical school?
Two things. You've heard the Minister of State at the Education Ministry working to ensure that private universities have a lot more space so that they can also expand and onboard a lot of our young ones who are coming up. So the objective of government is to create more space through various means at the top for those who want to go to tertiary, but also for the job market. If you have an economy which is weak in terms of its macro, an economy with dwindling growth, left us by former President grew about 9%. When his oil kicked in 2011, went to 14%. It dropped down to about 3.6% by the time our friends in the NDC were living. If you have an, living power, if you have an economy that is cringing in growth, if we had continued that curve, we'll probably cross zero and come down. If you have an economy that is cringing in growth, you don't expand, you don't create jobs. This year, we targeted to bring the curve back up to about 6.3 and to keep it growing and get to a certain appreciable stable point. We are thinking that we'll probably get to about 7 even. If we're able to get growth coming back up to appreciable levels, then you ask yourself the second question, is this growth inclusive? If you are not getting growth, you can't even talk about the inclusiveness or the lack of it. Inclusive, meaning, is it creating jobs? So as the economy now gets back in quicker steam, you stabilize, you improve the financial sector, you improve energy, you are doing a one district, one factory program, you are heavy on an industrialization agenda, you are pumping money into the venture capital space, you realize that the economy begins to open up. Agric is opening up. Look at what Planting for Food and Jobs is doing. Look at the numbers coming out of fisheries. You now begin to realize that the thing is opening up and can absorb a lot more of these people, whether it's agribusiness, whether it's industrialization, etc. So actually, what we are doing now is what we should be doing. Getting stability there, bringing back growth, ensuring that the growth is inclusive, so that while some can continue through school, others can also find jobs in the expanding market. Apart from that, in this year's budget, I know that there are serious conversations to have a clear jobs program in this year's budget. And it will be very interesting to hear what the final output is, which should ensure that we also get a lot more jobs for our young people out there.
Well, because I mean, you know, I'm in the media space, and it's, you know, you ask a lot of people, and they're not sure of what government plan is in 2.5 years, because the news should be out there, so people should be aware that, well, if it's agro-business, let me start building myself. It's fisheries, if whatever it is, because at the moment it's just like we're going to come out and see who needs us.
Our job is to push out there a lot more what the government programs, particularly that are going to create jobs, are. And I think it's a challenge that we take on board, and we should push a lot more.
Yeah, I think on this particular issue, I'll find time and come again so that we talk about it, because I've spoken to major stakeholders within education, in the economy, and they're all like thinking, no, hold on, in 2.5 years, we don't know what to do with these guys. Where are they going? And within school now, what are they being trained for? So at least when they come out and the economy is expanded, they can plug in somewhere.
We'll have to do a lot more education on that.
We'll definitely do that. Well, all too soon, that's what time will allow us. That's Kojo Oponkroma, dear friend, brother, colleague, you know, same old good friend. And I hope the education has gone down well. I hope I asked all your questions. And until we come back again, you know, thank you very much for watching. It's been interesting.